So, Bo, the next one that we look, this one makes us divide from the other content creator that lives in town with us is credit cards.
Yep, this is a big one. Here's how the question normally goes. Hey, guys, I've heard that credit cards are something I should not do. They are evil, they are bad, they are dangerous. Is it okay if I want to use credit cards?
So here's our stance on this. Credit card use is A-OK. However, don't mishear us. Credit card debt, no way.
And those two are not the same. Credit card use is not the same thing as credit card debt. There are tons of benefits from using credit cards. You may get rewards, miles, cash back, consumer protections. It may be convenience. It may be a number of reasons why you might want to use them. But there is almost never, and I mean never, a justification for carrying a balance month over month over month. If you're doing that, you are allowing compound interest to work against you instead of working for you.
Well, I mean, think about it. Credit cards had predatory interest rates on them. That's why this is such a very big line in the sand, is because if you are paying them off monthly, we have all kind of history out there with our millionaire clients, even with our financial mutants that watch our content. You guys use credit cards.
Yep.
But here's how you're using it different than the people that are using them as a trap is you're paying them off every month.
Every month.
If you find that you are actually carrying an interest, you're paying interest every month because you're carrying a balance, then I would tell you, you're just not a credit card type person, and you should cut them up, freeze them, do whatever you can to keep you restricted from using these dangerous but effective tools.
Okay, guys, I hear you. I hear you saying that, okay, credit card use is okay, but debt is bad. So that must mean I need to get rid of all debt. If I am actually paying interest on anything, that means it must be bad. And so oftentimes the next question we get that rolls in is, all right, well, should I pay off this debt? I heard you guys say this bad, or should I invest?
Yeah, this is one, even internally, because look, it's a balance there. We're always trying to walk this tightrope of, we know that sometimes, I know for me, when I first got out of college, got my first job in public accounting, I needed a car to get to work. But I also needed to get to work reliably so that I could actually have that job that would actually let me start saving and building margin, living on less than I make. So you're going to find out that sometimes you get in situations where debt can be an effective tool, but we got to have this ability to start investing so you don't always have to work for your money. We need your money working for you. So we figure, let's go ahead and give some guidance on how you might have to balance this delicate thing so you can have debt as a tool, but also be building investments in the background so one day you have financial independence.
Well, I think one of the things we have to discern is not all debt is created equal. That's why, Brian, will you hold the thing up for me? That's why we have the financial order of operations that will walk you through the 9 steps of what to do with your dollar. And there are 2 different steps for debt. There is step 3, which is high interest debt, and then there's step 9, which is low interest debt. So one of the questions that you have to answer is, okay, what counts as high interest debt and what counts as low interest debt? And that is where our rule comes in. If you are someone who currently has student loans and you are in your 20s and your student loans are above 6%, you may want to start prioritizing that. In your 30s, that number goes to 5%. In your 40s, that number goes to 4%. If you're someone who has used 23.8 and you are inside the confines and you have auto loan debt and you're in your 20s and your interest rate is above 10%, you may want to begin prioritizing that car payment. If you're in your 30s and the interest rate on your loan is above 9%, you may want to prioritize. And in your 40s, if you have a car loan and it's above 8%, you may want to begin to prioritize that. And then, of course, if you are someone who is using credit cards, it is okay to use them, but it is never okay to carry a balance. So if you have any balance on your credit cards, you should pay them off right now, today, and not carry those forward.
I think a point of clarification on this is I think like when I look at the car loans, people are going to be like, wow, I'm surprised by that. But realize, I think of myself, I was broke as a joke, had no money. So this was a reasonable thing to get me out of the gates.
Yep.
We always say it all the time. We'd rather people pay cash for cars than take any car debt whatsoever. But this is also the beauty of 23.8 is that 3 years, not financing longer than 3 years, is going to keep it in such a limited time window that it's not going to eat you alive with the depreciation, with the interest and all the other things, because it'll keep your car payment and keep the amount of car very much in check.